The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 22nd, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us. Not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the markets. We're going to go figure what they're tossing to you and I. We'll go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Right now is just fine, 877-927-6648. If you can't call in, you can always send me an email, steve@tfnn.com. Inside that heading, put radio show question. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 158 points at 21,861. S&P up 20, 2448 is the number. NASDAQ 100 up 1 4/10% or 79 points. Russell 2000 up 11, 8/10, 9/10%. Semis are up 1 4/10%. So green across the board. Volatility index down by slightly less than a minus 10%. You're going to want to pay attention to that. Gold is off $5. Silver is flat. Silver is, as I say, flat. Light sweet crude is up 27 cents. To the upside, you've got Google up $18, Amazon up 14, Regeneron up 11, Intuitive Surgical up 8. Sherwin-Williams is the one painting the screen's green out here, up $7, $336.58 is what she's trading out at. You've got Nordson Corp down $12, American Woodworks or Wood Mills or Wood something down 10 or 11% off $9.85. AMWD is the ticker symbol. Momo is down 18% or $8. God, you got some names out here. How do you pronounce this one? Baozun. Bowsen? Wowzer. I don't know how you pronounce it, but that's down 17% out here. So we've got some things to look at. Of course, I want to look at what you want to look at. And the first question out of the gates is, Steve-O, the NDX 100 SPX rally back to the highs with 3 question marks. Well, let's go take a look at what we actually have going on here with the S&P 500. And what you'll see, let me, by the way, let's do this. I'll do it from here. I guess I'll do it from here. Let me get this screen. Let me get some of the stuff off of the screen out here, first of all. So let's get rid of this trend line, text. I can always turn this stuff back on. I'll turn it back on at a later date. But it's nicer just to have a little bit of a clean slate out here. And that's what I'm doing. Hey, by the way, the computer system seems to be working a bit slow today. I don't know if it's a Skype thing. I don't know what it is. But, hey, whatever it is, we're going to get past it. So the show might look a little bit different today as we do it. Here's what we know about the S&P 500 specifically. Yesterday was the completion of an A to B equals CD down pattern. Reality is that was also a Gartley 5 pattern. Now, the reason why we know it's a completion, yes, the one-to-one price projection from high to low, meaning the high out here from the trading session of August 8th to the low that was put in on August 10th, the retracement, about a 70% retracement on August 16th. That set up your C to D leg. We don't know when the leg is being set up, whether it's going to do a 1-to-1, 1-to-1.272, 1-to-1.6 rate. Remember, we use these as price projection areas. And what you and I are always waiting for, it's very simple. We wait for the cavalry. So for those of you that don't know your Japanese candlesticks, you got to brush up on them. But better than that, you want to really you learn and utilize the ones that really work for you. Because you could go learn all 34, 36 of them out there, but you drive yourself crazy because there's only really a handful that you truly want to be able to utilize from a pattern recognition standpoint. So we see the A to B equals CD pattern that is out here. This was also coming back and testing a swing point area. The swing point either from June 29th or July 6th out there, as we talked about, is also coming in here and testing this little sign of strength, this little gap to the upside. Inside the S&P 500, we're not taking a look at volumes. We're just looking at candlesticks in order to be able to generate our signals for us. We're going to turn off that A to B equals CD. Now, every Gartley pattern, every A to B equals CD pattern is going to have 4 different outcomes. The Gartley has outcome number 5, and those outcomes being retracement levels. So if we take a look at all the way from the high down to the low out here, we're going to see that the first outcome is a dead cat bounce, is the 0.382 retracement level. That's 24.45. We're 24.48 right now. Where are we going to end the day? I don't know. Likely we are going to end the day at or close to the session highs. Typically when you have a candle like this, and you just go back and take a look at your charts where you open up and have virtually no little wick or anything to the bottom, you'll typically see days where you're going to finish at or near the session highs out here. So the way that this is cut through butter, the 24.45 level, suggests to you and I that at least the 0.618 retracement is the level that we're going to get to next. Outcome number 2. That's 24.62. Are we going to go back to the highs? I don't know. I don't know if anybody does know out here. But there are some levels that you and I can pay attention to, and we'll come back to those because I see we've got a caller on the line. It's one of our favorite callers, and that's Garo in California. Garo, thanks for calling. Thanks for holding. How are you today?
Good. Thank you, sir. How about you?
Very well, thank you. Were you able to, in your neck of the woods in California, able to see anything from an eclipse standpoint?
It was not. It was not full moon, full eclipse. It was half.
Yeah.
But it was good. Yeah, I've seen about 4 of them in my whole life since I was a young man. I've seen back in Middle East, in Canada, and in Alaska. And this was not very different from neither of them. So the young generation was just excited because that was their first time watching such a thing. But of course, seeing things like that Mother Nature plays with you, it is you can't copy that in anything else in the world. But it was nice. It was like any other eclipses that I've seen, at least 4 times in my life. Yeah.
Oh, that's great. Yeah, you know, it's amazing with in today's day and age with social media how you can just round up so many people and get all that excitement out there. So now you're absolutely right.
Absolutely.
So you want to take a look at that TAL Ed group out here. Ticker symbol is TAL. Why don't you tell the listeners what it is you're looking at and how I can assist you?
This is a stock that, on a daily chart, if you look at the daily chart, I started to buy that on July the 6th when the candle hit the first upper dot, and
yes,
the dot moved down at $20.60, which it was the 5-day, the 21-day, and 50-day.
Hey, Garo, we're going to go to a break here. My apology for that, but just hang tight. We'll come back to you in about 4 minutes or so.
Yes, sir. Yes, sir.
Right. Steve Rhodes and Garo in California. We'll be right back. So we're looking at TAL Ed Group, TAL. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Folks, we're taking a look at ticker symbol TAL. As you can see on this monthly chart out here, virtually everyone, not everyone, but virtually everyone that is a holder of the stock is in a profit position. In fact, those that aren't are just ones that we're buying thus far today up at the highs out here. And we're on the line with Garo in California. He likes to use an assortment of tools. A parabolic SAR is one of those. And then he combines a couple different simple moving averages to give him those trade signals. The 5 and the 21, I believe. Is that correct, Garo?
Yes, sir. That is 5-day, 21-day, and 50-day. That is my three main moving averages. That it is so critical, especially the 5-day. I'm a day trader. I've been doing this for the past 17 years, and yes. My 5-day simple moving average is the mother of the moving averages. That's what I do, and that's what I get the orders from. Yes.
Well, perfect. Okay. And so what are your orders telling you right now?
Okay. Starting, as I was saying, on July the 6th, the stock was $20.60.
Yes.
Of course, at that time was $120 because this stock split 6-1 on August the 16th.
I see. Okay.
And at that time was $120. Where the first dot hit and the dot moved down, and from there I started to go long, and I was day trading that, very profitable was to me, and so forth. It came now. Today's candle. It puzzles me that you think this is a shooting star, or this is just another candle.
It is a shooting star as we speak at this very moment. We really won't know until the end of the trading session. But if it is a shooting star, the only thing that we can see here, if I take a look at this chart here, for the daily chart for TAL, is that it has been moving higher. Today's move higher is with less relative energy. Now, normally what you like to see inside a market is you don't like to see this pattern. When the pattern shows up and you get a bearish reversal candle, it's a sign that it wants to do some type of retracement. In this case here, the retracement level, as you use the 5-day simple moving average, I use something that's referred to as the oscillator unchanged line to look for support. So here that's priced at 29.87. If it gets below that, then there's other levels that we can take a look at. But what we don't know is what today's candles. If this was the end of the session, then yes, it's a shooting star out here. And it says that it's possible that it pulls back into your dot level, which right now is around 29.42 on my system out here. Other levels where this could pull back to, I would look at some daily and weekly profile levels, really just the daily. And that would then say, Garo, you'd be looking for 28.60 to 27.45 as the range out here. If it doesn't turn out to be a shooting star today, then price and the volume that you have inside the equity today, about 4.1 million shares. Yesterday was 3.5, so you have some nice volume as it's moving higher. So if it's not a shooting star, then it can continue to move higher. It would only be a problem if it continues to move higher with less relative energy in a bearish reversal candle form. So, that's our reading as we speak right now at 1:22 in the afternoon. What are you seeing, or what are you considering doing here?
Nothing. I'm just waiting to see that if that drops from the 5-day. Any candle that drops below the 5-day. To me, that is a negative sign to me. Today it was a very good day to short it at $31.60, where that happened on 10 minutes. You can see that on a 10-minute, the candle came down and hit the first dot.
Yes.
That was 31.60, and I shorted there 2,000 shares, and I'm out. I got out at R1. The first resistance, the support was $30.80, and I'm just waiting to see what is the next move. But what I was interested to know that if the daily candle today was a shooting star, or is a beginning of something, or it's just another candle. I was not very sure about it. That's why I called you that your opinion.
Well, thank you. Yeah, shooting star as we speak right now. Interesting. I like where you got out, because when this opened this morning, there was some nice volume inside the equity. That's where that's where a lot of the volume is, about 463,000 shares. So you're going to know whether that was a fund that is taking or adding to their positions right here, because they will start supporting price right about now as we speak. So you'll have some pretty good information, I would think, by day's end out here with regard to Tal Ed Group.
Yes.
All righty.
Very good. Thank you, sir. Thank you for your time and information. I appreciate it. Thank you.
Thanks for calling. That was Garo in California. Always good to hear your voice, Garo. So we were talking about the S&P 500. Oh, this is my little chart for when Garo calls in. So let me go over back to the main view here, where we'll take a look at the S&P 500. And so here's what we know. When you have a Gartley pattern, you have an A to B equals CD, 4 to 5 outcomes out here. The Gartley, definitely 5 potential outcomes. So we know that the S&P 500 has been able to get up to the 0.382 retracement. It's a wide-ranging bar. So if it closes above 24.45, that's a decent signal to you and I that it wants to go ahead and make a run for the 0.618 retracement level. And we just have to take this information, this data, really one step at a time. As we talked about earlier, pretty good chance that today's candle session, it's not a day where Garo found a reason to short Teled. You're not going to find a reason to short the S&P 500. The candle strength is too strong. Odds favor. You just go back and take a look at it. When you have candles that begin like this, odds favor, it's not 100% of the time, but odds favor that the session closes at or near its session high out here. There's no reason for us to believe otherwise as we take a look at it, at least not as of 1:25 in the afternoon. Now, we've got 24.62 as a level to watch. But before price gets up there, you and I are going to be paying attention to Stevie's red line. Garo likes to use a 5-day simple moving average. I like to use something different out here. I like to take a look at, well, I'm not going to go into the explanation here. That'll just take too long. I'm going to do a workshop on it to explain exactly how to be able to identify that line. And it's a custom-built indicator. that I put together. But so 24.56 is really going to be the number. If this is it's nothing more than a counter trend bounce in a market that is a down market out here, we're not going to see it close above 24.56. We might see that area get tagged, maybe even a move up to the 0.6 rate retracement, then it close back below Stevie's red line, which, by the way, tomorrow it's not going to be 24.56.44. It's going to be something slightly different. But if we use this we'll call it 24.57 out here, that really becomes the target. Again, this is very clear. If this is nothing more than a counter trend rally, again, no reason to try to go short today. None, zero, nada, zip. I mean, you can, but I'm saying don't do it. I'm saying like in that movie Rodney Dangerfield, Back to School. Don't do it. Who did he say that to? Wait at least until price gets up to Stevie's red line. See if that acts as a deflector. Now, look. If price closes above the red line out here, well, then the price oscillator in the bottom part of my screen is turned up. It's above zero. There's nothing more bullish than a rising price oscillator above zero. That says outcome number 3, maybe even outcome number 4. The 100% move of a move would be in play. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Dow's up 165. S&P is up 20. So if you caught the segment that I did with Tom last night, I'm not going to go through the whole thing, but what I did say during that segment, and we'll take a look at it now, was that we were going to see a bounce that was coming, a bounce or bottom that was coming, and all that we were looking for was one thing. We were looking for a bullish reversal signal. Now, when I was on the air with Tom at 3:15, we did not have that. By the time I got off of the air, closer to the 3:30 time frame, and then shortly after that, the candle that had formed, actually at that stage, it was a bullish engulfing candle, is my recollection. I posted that inside of the Tiger's Den because we'd already identified the A to B equals CD down pattern, a Gartley buy pattern, which requires you to get some type of bullish reversal signal. And what I also said is we don't know whether because there are definitely two outcomes here. There is the outcome that the high that was put in, let me get the my crosshair out here, the high that was put in on the trading session of August the 8th may in fact be the high for a time period that lasts into the October time frame. It is possible. I'm open to that. Yes, I am long. Yes, subscribers are long. We're not going to pass up on a Gartley buy pattern along with many other factors out there. We're just not going to do it. You don't spend all this time learning these patterns and then not take the trade. So we were fortunate enough that the futures market hadn't really moved too high by the open, that we could get that trade fired off. So that was actually a beautiful thing. The futures last night traded up. The Dow was up maybe, 50, 60 points, and then it had pulled back just simply to be able to give us the opportunity to get in on the trade. Now, in the case of the Dow, couple different levels that we're looking at. Its oscillator on change line is 21,968. So the S&P 500 is likely going to get up to its level before the Dow is. But a beautiful Gartley buy pattern. In fact, prettier Gartley buy pattern in the Dow than inside of the S&P 500 out here. And the reason why it could go down through September, October, because we're in that unfavorable seasonal cycle. Again, something that I covered last night with Tom and all of you that were listening. And if the highs get taken out, then that pattern can be thrown out the door, totally thrown out the door, because this could turn into outcome number 5, which is an A to B equals CD to the upside. You cannot throw that one out the window either just yet. We need the market to go ahead and prove to us what it wants to do. Now, in the Dow, we don't have to wait for the 21,968 to give you and I a message. What we can do is we can focus on the weekly TAS market profiles. You see, in the case of, well, if you take a look at these 4 panels out here, these are all weekly for the equity futures contracts. Now, inside the ES Mini, which we also went long. Why? Well, it completed a pattern, the S&P, like you and I looked at. We also know that we had the bottom of the weekly box hold as support out here. The NQ never got down to test that, so we went long half the NQ or the QQQ series, and we went half long the S&P 500. Inside of the Dow, here's a little bit of the uncertainty out here. And the question is, will the Dow close above, as we speak right now today, or certainly at the end of the week, but will it trade above, close above 21,833? 21,833. We're trading right now at 21,843, so we're 10 points above it. You close above this. This says the equity futures contract want to go back and test the highs out there, which then starts to negate the theory that August 8th was the high. This is not how tops are made if you get back to the highs. Highs are made, and it doesn't give you a chance to get the Sam heck out of the door out here. So we want to watch. We probably get a signal, not from the Dow and Stevie's red line, but we get it from the Dow equity futures contract. Because if this is the case out here, and you know the expression, you can't bust them to the downside, you go ahead and try to bust them to the upside. Well, in the case of the ES Mini, that says you get back to 24.79 and change. Inside the NQ, 59.95. What happens there? I don't know. Is it resistance? Yeah, of course it's resistance. That's why we just simply will wait. So these are the areas, or these are the levels that we're watching for. I think today the best thing to watch is that 21,833 level inside the YM. You close above that, that is pretty good news for the equity futures contracts. If I take a look at, so what's the next thing I'm looking at? Well, to put the Rubik's Cube of the market together. You and I were watching the VIX index. Why? Because there's great signals out here. And one of the things that we're watching for is what is going to be today's one-day rate of change. Right now, it's 10.61%. If we have something less than minus 10%, Stevie will go ahead and put another green bar up here. And that is where you get or potentially get an initiation move. Initiation to what? Initiation to higher prices. The last initiation move that we got out here was the one on August 14th. That just led to higher prices for a couple of days out here. Very rarely do you see a one-day rate of change of less than minus 10% and see the market go ahead and crater the next day. So if you see that, and if you are short from higher up inside the market, you don't have to close that short position, but you should anticipate higher price. So what are you going to be watching for? You're going to take a look at the spot volatility index, and you're going to see at the day's close, at the end of the session, do you have a negative rate of change less than minus 10%? I mean, like minus 10.5 or minus a 10.69 like it's at right now. That'll be an important piece of information. If you get that, what does that mean for the volatility index? For those of you that trade those products out here, well, what it means to me is that, what does it mean to me? Where is that chart? Where is that chart? Oh, it's right here. That would then mean to me that you're going to see the spot volatility index get down to the 1141 level. That's a minimum. Right now you're trading at 1176, so it's not that much further down. But the key is, should you see a close below 1141, well, then the floodgates for the spot volatility index open up for it to get down to about the 944 level. And if you don't think we've seen any short covering yet, well, you can bet your bazooka, whatever that is. You can just simply bet that you're going to go ahead and see that short covering unfold, and you're going to see a big, huge rally, probably back up to the highs, if not beyond the highs out here. So another key level to be watching and putting together the Rubik's Cube of this market is going to be that 1141 level. And that's the 50-day exponential moving average. And if you close below that, that says odds favor getting back to the bottom of the band. Is it going to be 944 exactly? No, but it'll be somewhere close to 944 out there. So that is how, and then what's the last piece of information that you and I are going to be watching for? We're going to go take a look at that advanced decline oscillator because, hey, let's face it, we had price moving lower inside the New York Stock Exchange, and we had a rising advanced decline price oscillator out here. We had a rising advanced decline oscillator reading out here. And those are beautiful setups, especially when you get a bullish reversal signal, as the New York Stock Exchange did. We had a nice little doji candle out here on August 18th. And what did we have? We had a nice little bullish engulfing candle yesterday. So again, you have all of this is how the market really squawks, walks, and talks to you. You want to understand your bullish and bearish reversal candles, and then just simply integrate those into your trading patterns out there. If you're trading without them, you're trading blindly. So the last thing that you and I are going to be watching for is whether or not that advanced decline oscillator reading can take over the zero line. Inside of the NYSE, you're still below zero. Inside of the NASDAQ Composite, still below zero. Inside of the Dow, still below zero. So as we speak right now, all we know for sure is we've got a nice counter trend rally that should continue a bit higher up to Stevie's red line. We're going to watch the Dow Equity Futures Contract YM for its resistance level, and you're going to watch the spot volatility index. This is Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Hi folks, the 800th edition of the Gold Report will be published next Monday. To celebrate the last 15 and a half years of calling the gold market, I'm doing a special promotion. You can receive 60 weeks of the Gold Report for only $600. That is $10 a week, which is a savings of 50% off the regular price. If you want to understand the entire supply and demand equations that move the gold market, including where the XAU, HUI, and mining equities are looking to trade, if you want to understand the correlation between the dollar, the yen, the South African rand, bonds, and gold, the Gold Report is for you. I'll give you the entry price target, and stop for each equity, ETF, future, or option trade. The Gold Report is a long-term newsletter with the focus on building real wealth to a successful portfolio of gold and silver equities. You can take advantage of this special promotion until August 27th. That's 60 weeks of the Gold Report for $600, which is a 50% savings. Go to the front page of TFNN.com or call 877-518-9190 and order now.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. Danny in Atlanta wants to take a look at the December wheat contract. That's what we have up on our screen here, our four-panel view. Take a look at the 60-minute. That's the left-hand chart, the 240, 4-hour chart. Next to it, then you've got the daily and finally the weekly. And what you'll notice on this set of charts out here with their TAS market profiles, you're going to notice that each of the bars are red. So you've got what they'll call red shoots out here, and just simply telling you that sellers are in control. We can't find double bottoms. We can't find anything out here. All we can really look at is expansions of swing points out here. And, geez, Danny, if we do that, and I just simply put my expansion tool, or Fibonacci expansion tool, and I guess we just simply go from what looks like around the week of April 24th up to the high out here the week of July 3rd, your 1.272 expansion gets you into the 417 area. So perhaps that is the next move to the downside. Perhaps that's an area where it finds support. That's looking at the December contract. Here's a 60-minute. Whoa. That's not a good view. There's a 60-minute profile out here. That's not going to help you, or just giving you bearish confirmation. If I switch over to a 30-minute time frame, you can see that even it is trading below profiles, 431. Being the bottom of that level. So I'm trying to find a time frame that we can go to even see if there's any kind of support. Now you can go down to a 15-minute profile out here, but I don't know that I would certainly use that. In fact, you cannot use that. The only way you could potentially use that is trying to identify a bottom would be to see it close above the top of the box out here. And then you'd really want to see price come back, test it, and reject it, and see a new profile form on a 15-minute basis out here. So, Danny, I hope that that assists you with whatever it is you're looking at inside of December wheat. But at this stage of the game, the only other thing that I can throw out to you, because I'm assuming that you are trying to look for a bottom out here. Is that the accurate statement? There is one glimmer of hope out here, when I take a look at the TAS market profiles, see these pink, would you call those chartreuse? Chartreuse? Is that the color out here? We'll just call them pink. And if we take a look, when you get this little cluster, okay, we've had now 5 of these in a row. You typically like to, unfortunately, because of, I was just trying to see, where can we go back to find an example of that? I can't. Here's what I can tell you after looking at these profiles often, is that when you get when you get that chartreuse color, I can't tell you why. I know there's a reason why. I just don't know that reason why. But what I do know is when you see that, that is a signal of a trend that is coming to an end. Maybe coming to an end. What you typically like to see is like a cluster ahead of time, like a 2 or 3 cluster, and then one more 2 or 3 cluster, and then like a 3 or 4 type cluster out here. We don't have that inside this December contract, but you do have that first cluster formation out there. So that would be something I would be paying attention to. But you're going to have to find some other piece of information to get you long into this contract. The 240. Closing above the top of that box certainly would be nice out there. That would be a pretty good move considering where we're at right now. So watch the 417 area. We didn't pay attention to those chartreuse colors. Here's kind of an example on a 240-minute chart out here. You see how we get one little, clears your first cluster of 2, then you get one of 4, and then you get another one. This one kind of screwed it up here. You would have gotten one of 5, but you see how it just kind of stalled price. This is a 240-minute chart out here. So it is when you get it, now in the daily chart we're not going to get that, but that's what you sort of like to see when you're hunting for bottoms, and then you're looking for other patterns to complete out there just to go ahead and confirm the message that you're looking at. So I hope that assists you out there. That's for Danny in Atlanta, who did get a chance to see the solar eclipse. I don't see any email requests out here. I think I've gotten everything inside the Tiger's Den, and you sort of know my thoughts on reading the charts. So it's nothing to do with my opinion. Yes, I'm bullish as we speak right now. I'm long into the trade, but I'm anticipating a potential bump ahead out here. So I am uncertain as to whether or not we're going to go back and revisit those highs. I know what to look for to give us a signal that we are. Nonetheless, let's go take a look at it's sort of tiring to look at gold, quite frankly, because this thing isn't doing much of anything. It's trading in between a little bit of a range out here. There's nothing new that I can provide for you on gold. There's just nothing new. So let's just skip it. Let's just skip it all together out here. When it busts through a support level, then I'll tell you, guess what? Now we just got a bearish confirmation. When it busts through resistance, I'll tell you we just got a bullish confirmation. But as we speak right now, it's more neutral or range bound, and the range keeps getting a bit tighter and tighter out here. So no reason for us to spend any time. Now let's go take a look at some individual stocks. Let's go take a look at some things moving here to the downside. What is this Nordson Corp? NDSN. And let's go see what kind of volume. So just simply out with earnings. And this thing is now taking out a swing point from way back here in June 7th. This is the daily chart. Let's go ahead and add some volume metrics out here, see what it's doing. But that wide-ranging bar, it is a wide-ranging bar out there. That's telling you acceleration to the downside. Volume-wise today, this is, well, it speaks for itself. So now you're busting through a swing point with volume. Where are we headed to next? The logical spot, when we take a look at this equity, is the last time that this broke out. We don't even have to look at profiles. Where this thing broke out is around the 105 to 108.94 level. Now that breakout party, that occurred with RSVPs of 1.659 million shares out there. And you're coming into it 1.8 million shares. Nonetheless, that could be a level of support, 105.74 to 108.94. If that's not support, then we've got another support level out here. And that was set by the gap down here where there were 1.7 million invitations sent out. And that takes you back into the trading session of August the 23rd out here. You've got an A to B equals CD to the downside. If we go measure that, and this is really coming from the high out here, looks like May 22nd is your A point. Your B point looks like the low of June 7th. Your C point out here on August 14th. You can see that the 1-to-1 is where we're at right now. Yeah, it's not really an A to B equals CD. Can't call it that when you have a 90% retracement. So ixnay on the A to B equals CD. Instead, we just simply go take a look at support. NDSN headed to, we'll call it the 105 area, break below that, the 92 level. And that is where it looks like it is headed. Let's take a look at this AMWD, American Woodmark. American Woodmark. Why is that familiar out here? Why is that familiar? Somebody probably knows. Why am I thinking that's familiar? But look, this is gap down to a sign of strength. So if we take a look at it, here's where the sign of strength occurred on this equity on February 27th. Then it was 519,000 shares. You're gapping down with lighter volume. So I would expect that on American Woodmark that this 8150 level should hold. It just pulled back to a breakout area. And, Garo and I were looking at a short-term chart for TAL-ED. Here, we can see that the buyers of this equity on February 27th, they are supporting this pullback. AMWD. Why do I know American Woodmark Corp? Maybe it's something else that's similar. See Rhodes with TFNN. Dow's up 167, S&P up 21. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. I knew that name, American Woodmark Corp. That was one of the scholars. My youngest went to University of Florida many years ago. American Woodmark was one of the scholarships that she received during her first year out there. So, thank you, American Woodmark, and I'm glad that you've got buyers that are supporting you. Looks like the last ticker symbol we're going to take a look at for the day is Intel, INTC. And this is for the Mystic One inside the Tiger's Den. You're looking for a long position out here. So as we take a look at it, this is trading down in a nice up market today. So far pulling back with about 12.7 million shares out here. And the question is this going to make a beeline for the lows out here from July 10th, specifically where there's 29 million shares. Well, let's go put on our market profiles, see if we can find any horizontal levels of support out here. In the case of the daily, the answer is no, because it's below all daily profiles. In the case of the weekly, well, it's taking out the weekly right now. So, Mystic One, looks like you're going to get a chance to buy Intel for a price lower than where it's trading at as we speak right now. Last thing that you and I could take a look at would be retracement levels. Those are expansion levels, so that's not going to help us. Let's go ahead and put our retracement levels out here, see where this thing is retracing to. Let's get rid of the weekly profiles. That's not going to help us. And so the 0.618 level, only about 34.56. That could be an area of support. Could be. You'd want to see some type of bullish reversal candle the next session, which then could start an A to B equals CD to the upside. But if 34.56 area doesn't hold a support, then I'd say let it get down to test that swing point. The 0.786 retracement of 33.97 is so close to the swing low from July 10th. In fact, if we put it on a weekly basis, then we'll probably see it here. That says, yeah, that's interesting. You're not that far away from testing the high of July 10th. That's the week of July 10th. That's 34.71. You're at 34.74. If it closes inside there, it says lower prices. You can buy it when it's a bit more on sale. Folks, stay tuned. Your favorite polar bear and mine. He's a smart guy, by the way. He's up next. That's David White. After David, you got Tom O'Brien from 3 to 5. Andy Heck from 5 to 6. Two more smart guys out there. Have a great Tuesday. We'll see you on Wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.